Welcome to another riveting edition of Risk and Reward. I'm Charlie Gasparino from Fox Business, the New York Post. I am here. Did I say Risk and Reward?
I wasn't going to correct you, but you're out in Los Angeles.
That's
I figured
another
you're a little
one.
jet lagged. I don't know.
By the way, that's somebody else's podcast. Bob, I'm out here, as you know, at the Milken Conference in Los Angeles, suffering from wicked jet lag. So, of course, I would screw that up. But I am here with Bob Sloan, the founder, the chairman of S3 Partners, the granddaddy of data. He's back in New York. I'm here in LA at the Milken Conference, which, if you don't know it, it is maybe the best thought leader conference in the world, combining people from all aspects of culture and business and politics. I had the immense pleasure of doing a fireside chat here yesterday with Governor Ron DeSantis. We'll get into that in a little bit, the Florida governor. Today, I did a fireside chat with Tim Scott, the head of the banking committee, the senator from South Carolina, both key figures in the Republican movement, potential presidential candidates, I guess you could say, and power players, and that's why they're here. I also have been doing a lot of reporting about what's going on. Ken Griffin, the Citadel founder, just got done with his fireside chat, I think it was more of a panel discussion, but he took some interesting shots at Mayor Mondami, who made him a poster child for his tax to rich scheme, that sort of that second house tax. And this is something I think is very reckless. We talked about this last week. When you single out somebody, whether it's Ken Griffin or anybody else, in this environment where we have, it's a very toxic political environment, you're raising the sort of chances of political violence. And Griffin spoke about that. It was frightening in his words to see himself being, Mondami's grinning outside Ken Griffin's penthouse apartment and making him the target. I mean, we all know what happened to the United Healthcare CEO when you become a target. So that's some of the things that he talked about, some of the things I covered here. You want to go into your stuff, or you want an overview of what happened down here? I'll toss it to you. What do you want to do?
Well, a couple of different things. One, it sounds like you had a barn burner of an interview with Ron DeSantis, number one.
Yeah.
Two, the interview with Tim Scott. We'd love to get into that. Three, I saw the Ken Griffin interview, and it's hard to argue with him. It's pretty plain vanilla. It's pretty plain vanilla. He's the high-profile guy. You put him in harm's way, and there's just no excuse for that.
It really is. And aside from that, we spoke about this last week. I mean, you just don't do that if you're a responsible public official. He also said that this whole thing with Mondami is causing him to rethink maybe scale back on his expansion plans in New York. Citadel, as you know, is involved in was initially planned a $6 billion expansion. Lots of jobs going to be created, a lot of economic activity for New York. He basically said that we're going to scale that back a lot. Scale that back. He didn't say how much, and put more emphasis on their headquarters, which is their official global headquarters in Miami. Remember, Citadel in 2022 moved out of Chicago. Ken Griffin cited the sort of dysfunctional nature of the state's politics, taxes, crime, moved to Miami. And, something I spoke with DeSantis about yesterday. He called Mondami and some of these blue state officials the best real estate agents that exist. The best real estate agencies said don't exist in Florida, bringing these people over. It's the politicians and their insane economic and social policies that are causing people to flee places like New York and California. New York, you leave to Florida or South Carolina, as in the case of because I did speak to Tim Scott. South Carolina is the fastest growing state right now in terms of bringing new people in across the country. And Tim, the senator from South Carolina, that was involved in some of the economic activity there. He was telling me, economic development activity. He was telling me that there's a new term that they use in South Carolina called halfbacks. What happens is people go from New York to Florida, down there, realizing Florida is becoming very expensive and crowded, particularly in the areas where people want to live, and they move halfway back to New York to South Carolina. So they're halfbacks. That's what he said, and I found that funny. I wish I knew that term when I interviewed DeSantis. That would have been funny to run that by him. But DeSantis didn't mince words. Again, I'm sorry, Bob. Go ahead.
Yeah. What do you think? So we had Amazon come to New York City and that got blown up. You just saw Spirit Airlines
because right? AOC led basically attacked them for their non-union workforce.
But when does this catch up? Because having Amazon here may have put a dent into the budget, quote unquote, crisis that we have here. So no one wants to talk about that. The second thing is Spirit Airlines and JetBlue blows up, more jobs out the window. And now you're trying to chase out someone that's spending not 1 billion, not 2 billion, but 6 billion, has 15,000 high-paying jobs, all of whom have paid $2.3 billion in taxes. And you basically want to vilify them and throw them out of New York City. So Amazon and Citadel, we want out of the city. When does this catch up to non-thinking politicians? It doesn't seem to.
I don't know. I mean, the Democratic Party is,
about jobs, right? I mean, this is about jobs. People are scared about the economy. Confidence is low. People are scared about AI, and here you have good paying jobs, and you're blowing them up.
Yeah, I mean, listen, I don't know. I mean, listen, people vote with their feet often, okay? And I think you're having that. I mean, New York has become, and by the way, with technology, it's so much easier to work. You don't have to work in the office. Listen, I'm here in LA. We're doing a podcast. You're in New York. You could be anywhere. I could be anywhere, and we can do a podcast that could sell and make money and help people make money. You don't have to be in New York. You don't have to be in California. I could have done this podcast. I'm here because I'm working here, but I could have done this from my hotel room. I could have done this from anywhere, a car. I could have done this from my house in South Carolina. You know what I'm saying? I could do this anywhere. And I think that's what these people have to realize. There's nothing. Listen, there's no indentured servitude in New York. If you want to, you can't force people to live there, Bob. You have to you have to create incentives for them to live there. And I think that's how this ends, when more and more taxpayers leave and budgets become much more difficult to balance. And, when they run out of money, and, because there is going to be a limit. I mean, I just can't imagine that Jamie Dimon and these folks are thinking of massive, expansion plans in New York. And I can tell you that DeSantis said that. DeSantis told me, he goes, let me tell you something. He gets calls every day. People want to come down. And I asked him, I said, will Brickell say again?
What's his number? We might move.
Hey, if you make, if you
I'm not kidding. It's like, keep going and you want to chase out 100 jobs out of New York City, okay, fine.
I'd love to buy a nice little condo on the beach, and so we can do our thing down there. But here's the thing, Bob. People are moving to Florida still, despite the fact that it's becoming. Let's face it. There's a degree in Palm Beach, in Miami, where there's a lot of crowdedness. But the state as a whole is still pretty affordable. And one thing that DeSantis is doing to try to increase affordability is they're trying to eliminate property taxes on people who live there, which I think is interesting. Tim Scott told me that he knows they're in a race with Florida. They're trying to eliminate, they still have an income tax. They're looking to eliminate the income tax now. Now think about it. If South Carolina eliminates the income tax, Florida eliminates property taxes, man, what an incentive to move there. I mean, I don't know how New York competes with that. How does California compete with that?
Well, when your housing stock costs $700,000 a unit, rents gravitate towards the unit cost. And when you restrict supply and you put red tape and you make it very hard to build buildings to house people, you get the unaffordability that you're protesting about. It's the policies that cost the unaffordability, not the greed of people. It's
I
just,
agree, and it's
just
catching up
wow.
now because it is catching up now because people are leaving. Ken Griffin today said, besides the obviously the being frightened. But by the way, it is frightening when someone stands outside your house and generates that many clicks on a social media hit to call you, say you deserve to do X, Y, and Z. You're a billionaire. That puts that's scary stuff because given this environment. But even more, he basically said he's cutting back on his expansion in New York, moving it to Miami because of that. Because he said, and I have a full write-up on this coming. He basically said, if the mayor of New York is making it clear he doesn't want me, okay, well then we'll move to where they want me, and they clearly want you in Florida. Governor DeSantis has made it, Florida a very appealing place to stay. Both of those guys could be president. They both demurred when I asked, kind of like, I love my job now. DeSantis was hinted a little heavier than Tim Scott. Both ran the last time, did not win. Trump, as you know, became the nominee. But Tim, but they both left the door open. Might be an interesting ticket. A Scott, a DeSantis. I can see DeSantis at the top of the ticket because he has the executive experience as governor, and Scott as his VP. That would be an interesting ticket. I have no idea if the two know each other. I did not ask them. But that's a lot of it's chemistry. I mean, JD had good chemistry with Trump from everything I know, and so some of this has to work. One reason why Kamala Harris did not pick Shapiro, she claims, is because of chemistry. She had more chemistry with that knucklehead Tim Walz, which should tell you something about Kamala Harris right there. If you have chemistry with a moron, what does that say? Can I answer that, Bill?
Well, we have great chemistry, so I don't know how to answer that.
Oh, well, yes, us two towering intellects here, right? All right, we're going to get out of the politics now and get into
the way,
some...
I want to ask you a question, serious question. Do you think our show is too political? You think our show is too political?
You keep saying that. You're the only person that says that. Like, you're the only person I hear that you hear from somebody else that it's too political. I am telling you, I ran into Dan Ives here. Dan Ives, the big tech analyst. He loves our show. And by the way, he's all numbers.
Dan Ives is always pretty good.
Yeah, no, he told me, he goes, I love that podcast. You and that. Do you know Dan? I don't think you know Dan. Yeah, we're going to sit down and do dinner. But he goes, you and that gentleman, you guys are great. You're lively. You hit news of the day. And on top of that, you call it straight. He said you call it straight. So I don't know.
I don't think we're too political at all. I just think when other people go out and say, "I'm going to burn your house down," okay, we're going to talk about it because it has economic.
Is it political to tell Zoran, to criticize Zoran Mandami for doing something stupid with Ken Griffin?
No, but I really do believe that type of thing, when you vilify someone and make them a target, which is what he did
in a political way. It's not like
people. Chills
Ken
people.
Griffin,
It's up to people like you and me.
Right.
It's up to people like you and me that our own people are not owned, and we can actually do and say things that we want to say, that we say them clearly. It's up to us.
Now, you can criticize big hedge funds for a lot of reasons, right? They're controversial. Sure. They've always been.
But let's be clear, right? Hedge funds, in and of themselves, do a lot of good work, Robinhood, etc.
Yeah.
But if you said, "Hey, is their existence to actually create great social policy?" The answer is no. Their answer is to make money. No. So let's be clear. We understand.
They're speculators, a lot of them, and investors and speculators. But so you can criticize them for that. I mean, the meme crowd criticized, the market makers like crazy, like Citadel, which I thought was completely unfair and wrong. But be that as it may, it was controversial. But when a guy creates all these jobs and you're using him as a political prop, you do draw attention to him. And in this environment, that is reckless on steroids, recklessness. I mean, we literally just had another assassination attempt against Trump. The United Healthcare CEO, and Ken mentioned both, by the way. Ken Griffin did at the conference here, and it's about time you just the left is drips with these politicization and these demonization. Jeff Bezos basically financed the Met Gala, right? They were they were they were like signs about him and attacking him for that. When he put his face up there, I mean, do you know what type of crazies are out there that read this stuff and do and act on it? I mean, this guy that tried to kill Trump at the correspondence dinner was talking about Trump being a pedophile because there's a meme on social media that he's a pedophile with Jeffrey Epstein, which is completely untrue. But that's how crazy the society is. So you really got to be careful with this stuff. And I think politicians should be at the tip of the spear on responsibility for this stuff. And so should journalists. And that's kind of what we do. We call people out. We don't put targets on them. We try to be fair, see both sides of the story.
There's a rationale. You're not saying they're evil or bad or this or that. We're just saying, look, this is what we think. This is how we think about it. This is why we think about it. That's why we have our data with your news sourcing, and that's why people love this show.
I know. And you know what I'm really missing right now? An S3 fleece. It is so fucking cold here. All right, so I'm outside. This is Beverly Hills, right? It's kind of overcast, but there's a wind chill I'm freezing my ass off here. So without further ado, let's get to your actionable calls.
Well, let's review what we did last week, and we'll go to our picks. We got a few things to talk about this week. The first thing is we made a bullish call on AIG. AIG was up 5.3%. That turned out to be correct. We picked a bullish call on Lind, which is the world's largest industrial gas producer. That turned out to be correct, up a point in 1.35. And we had a bearish bet on Colgate, which turned out to be incorrect. The share was down 2.2%. So we were 2 out of 3 last week. This week we don't have new picks this week. But a couple things have happened that are just great. One is we got to talk about eBay and GameStop. Got to talk about that.
We should, and here's why we should talk about it, because there's not one person here that I spoke to, and I spoke to a lot of smart people here that think this thing is going to fly. They think it's insane. We should point out it's Brian Cohen who runs. He's the majority shareholder of GameStop, right?
GameStop, that's right.
Yeah, how big is the market cap on GameStop?
I think it's $9 billion.
Okay, how big is the market cap on eBay?
50 something.
53, I think that this number. It's 53 billion. He literally is proposing a takeover of a $53 billion company from his perch at a $9 billion company. Now he does have GameStop. GameStop barely exists as a functional company in the sense that the video game sales, the video game sales at malls is a declining business. He's closing down outlets. He's investing in crypto. He basically has created, with the help of meme investors, by diluting the hell out of them. I mean, just diluting. He's basically creating a hedge fund where he has $9 billion in cash. He has crypto. He has securities where the company does turn a profit, but it turns a profit based on those metrics, not really from the GameStop stuff. So he's trying to build something bigger, but he's doing it, Bob. It's going to take $9 billion. He's got $9 billion in cash. He's going to borrow 20. That gets him to about 30. Where does he get the rest?
Well, I think he's going to borrow more than 20. So I think he's going to borrow a lot more of that. I think it says a lot about credit markets that he thinks he can actually do it, number one. Number two, what our data shows is where the positioning actually is, not where people think it is. Our positioning is always ahead of the narrative. And the narrative about GME's bid for eBay is The active longs and shorts are trimmed and have stayed trimmed. Institutional longs are down about 40% year to date, shorts down about 7%. So both sides have walked away. In other words, no institutional sponsorship whatsoever. Retail is driving the tape. The story is about M&A. The reality is about a vacuum of institutional sponsorship. That's really the story. We can go on.
So institutions aren't touching this thing.
No, they're not. And we have a chart up here. The folks that clue in, they can look at the charts themselves. I can see it. But yeah, I mean, you look at institutional loans down 40%. So they don't want to play, and the shorts are down, which is interesting too. So everybody's just like, I'm out of this thing.
They don't want to get caught.
I'm just out of this thing. I don't. It's crazy. But what's left unsaid is he thinks he can go out and borrow 30, 40, 50 billion bucks to leverage.
Why would he have to borrow that?
To go buy?
Well, let me ask you this, Bob. You've been in this business. You know the business. You're an expert. Can he do a rights offering to raise money?
He could do a lot of different things. I mean, look, you're right. I'm not trying to say his only option is to go borrow money. Obviously, he can go to his shareholders. There's a lot of different sources of financing, but that's a lot of money, and it's going to have to be some kind of rights offering plus going to credit markets plus to get up to go from 9 billion to 50 billion, right? Because I think the premium was 20% over the stock price. So, it's just a lot of money. It shows you, though, the credit markets are still alive. There's still money out there. If he thinks he can do this, there's still money out there. He's not a stupid guy. And he's obviously got his bankers telling him, like, look, long shot, but maybe we can make this happen.
I don't know what bankers are telling them, because there isn't a banker here that thinks it's going to happen. And I've spoke with a lot of people. They think it's absolutely bonkers. They think he's winging it. They think he's this is like. Now, he's always been anti. I mean, he would love just to prove all the bankers here wrong. I mean, that's his shtick, right? His shtick is anti-establishment. He's got the meme army on his side. But you got to ask yourself, if you're now this argument never lands with the meme types, because there's a cult of personality surrounding Ryan Cohen. They tell me they believe in him. So they'll buy the stock, but man, they are rolling the dice, because let's just say he wins this. And,
by the way, so he doesn't buy eBay. Maybe it's buying something else, right? So he's. It could be that he just wants to travel into the marketplace. I don't agree with this, but I'm just saying, if it's not eBay, it's something else. Look at me as an M&A player, right? Let me announce I'm going to try to do this deal. It may not work, but I'm in the marketplace. You never know what comes through your door.
Yeah, I could see that. And he's got cash. He's got money.
He's got some money.
He's got some money. But at some point, people are going to get tired. If you look at a 1-year chart of GME, essentially down, right?
Yeah, it's down.
You can earn more money in a bank account.
Let's switch gears to shipping.
That reality does kick in every now and then.
We always talk about we love talking about shipping stocks. We have been talking about shipping for quite some time on this show. We made a call back in April, shorting Maersk, long the rest, and it played out almost immediately. And that was in April, and I think you're seeing that on the screen now. And now you got short interest is rolling over, Maersk shorts are covering. So the narrative still talks about shipping and the geopolitics and Strait of Hormuz. The positioning says the trade's already unwinding. People are like, okay, think we're going to cover Maersk and we're going to unwind this trade. So that's when the data says something very strong. That's why we put it on this show, because look, we're not right all the time, but we have a pretty good track record of anticipating market trends, and this is one of them. The other thing we're looking at is semiconductors. The semiconductor, the markets entire 2026 return is coming from one place, which you have SMH is up 32% year to date, and it's responsible for 40% of the NDX gains. But the key line is that short interest is up sharply, and now it's retreating. So hedges are coming off, shorts are covering. The narrative says overextended. Positioning says
Interesting. I don't want to rush you. You got more stuff, Bob. I'm good. If you got more stuff, let's let her rip.
we want to go over Figma. We've been talking a lot about that, and a lot of our notes, and you know, Figma is a good battleground stock. You know, it's a design and product platform. The short interest has climbed alongside the stock's decline. The short interest is up roughly about 53 million shares. It's up about 12 million shares since October. It's a more than 4 times increase as the stock has fallen from the mid 60s to under $20. Short pressed harder in March into the bounce, and rather than covering, they're positioning ahead of their May 14th earnings print and the release of the approximately 61 million in extended lockup shares 2 trading days later. So people are still shorting this stock wildly into the lockup period and into the earnings call, and it's just a stock to watch because it's become a battleground stock.
Okay.
And then, you know, from there, that's really about it. That's what we got for this week. We got a couple of good stuff, I think, for next week, which there's a bunch of things in the battleground area that we can talk about. We've noticed that if you look at some of the most skewed short stocks, most skewed meaning where short interest is greater than the active long, IonQ keeps on coming up. And, you know, you keep on hearing about advances in quantum computing. We're much closer to quantum computing than actual people think. I think Google put out a white paper about this. IonQ is shorting, is skewing very short. The active long is like $1.9 billion, and the active short is $4 billion. So the long to short ratio is 0.46. That's really low. SoundHound, which is a voice AI software, also with long about 513 million and short active about 1.4 at 0.36. So you're seeing that even though there's a lot of hype around AI, a lot of the stocks that are skewing massively short are in the AI space. So we thought that was interesting. We thought we'd go over that this week.
You know, before we leave, we should point out that the Dow and the S&P have notched record highs. Oil is down. What do you make of this? I mean, this is kind of like the market. I'll tell you, Bob, the mood at this conference is very positive. I'm not hearing people like running around. I'm not hearing what you see in the newspaper here. They think the U.S. economy is resilient. They think, you know, a lot of people here deal with the sovereign wealth funds, the Saudi PIF, Abu Dhabi, you know, Mudabala, and they're putting money to work. You know, they're rocking and rolling, despite, you know, the fact that Iran every now and then throws a grenade at them, so to speak. This is incredibly positive, and maybe, you know, the glass half full scenario with Iran is where we should be looking. These are smart people. You know, they kind of get everything.
Well, what's the move, right? So I think what people have figured out is that the blockade of the blockade was a brilliant move. It's forced their hand. We don't have to put boots on the ground to get concessions, and it's a waiting game. And the U.S. can wait. And once again, we're going to have to bail out Europe because they can't wait, because they made stupid energy policy decisions around being energy dependent on Russia, and they're paying the price for that. So I would say we're in a position to wait. It's why the economy is strong, and I think the markets understand that we're being paid to wait. Now, that's not to say that gas isn't pinching. It is. That's not to say the food prices aren't pinching. They are. That's not to say that people aren't sick of 6 years of inflation. They are. But if we just have the patience, 60, 90 days, eventually, something breaks. You can almost kind of feel it, right?
I think Trump does have the patience. I think he's resolute on this. I think, Ken Griffin talked about the resiliency of Donald Trump today. Like he said, listen, I've sparred with him in the past, but I have an appreciation of his resiliency. The guy, there's been at least 3 attempts on his life, and he's still kicking, and he's not, he's not backing down. You know what I'm saying? And I think he's resilient.
I think if he pulls it off, it goes down there with the greatest of the greats. And
I agree.
I you can say all you want about him and whatever, but what he's doing takes a lot of guts and it takes a lot of bravery, and I personally think it's the right move.
He's an incredibly consequential president already, and he'll be more consequential if he pulls this off. And the world will be a better place as well. Well, I think we should end it on that kind of happy note. Bob, I'll see you in the studio next week, right?
Yes, we'll do it live here at Worldwide Headquarters.
By the way, the background, Dan Ives was convinced that we do it at the New York Stock Exchange, given the background. He said, yeah, well, kind of.
Well, we should have him on. He'd be a great guest.
Oh, I'll ask him as soon as I see him in a few minutes. Yeah. And he will be a great guest. By the way, people believe he gets knocked as a perma bull, but he's been right. I mean, he's a glass half full guy.
He's a glass half full guy, but he's been right a lot. I mean, look, no one's right all the time. I mean, it's just not. That's just not.
Buffett's not right all the time, as we know. But right. Except for me, I'm right all. No, I'm only kidding. You know what's right all the time? To be honest with you, S3 Partners Data, the most popular independent data provider on the Bloomberg network. This is not a joke. That's real.
No. We developed the best-selling application in the history of the Bloomberg terminal. That is
by the way, I hear people talking about it all the time, and that's what makes this podcast sing. Is the stuff that you guys, the special sauce, the secret sauce that you guys do at S3, which is pretty amazing stuff. Makes people money. And again, we don't give investment advice. We just give you data points. We give you news of the day. We give you sometimes opinion, but it's usually educated opinion. I guess with that, Bob, I think I'm going to go and warm my hands over a fire because it's freezing here right now. Do I sound like a pussy?
Charlie, I got to tell you, I'm just going to say you don't sound like a pussy. You don't at all. But you need to come home.
Trust me, jet lag is no fun.
You need to come home. That's all I'm going to say. You need to come home.
I passed out by the way, I missed.
You need to get back to the grid of New York City.
I got invited to some hot shit parties last night, and I fell asleep at 9.
It's not like you. A couple of martinis are usually.
No, I had one martini last night, and I was like, all right,
Red Bull.
I'm dead. Give me the bed. I'm tired. I mean, yesterday was a rough day. It was a lot of running around, a lot of work, TV for Fox Business, writing for the Post. So I really need it. And today was like interviewing DeSantis today was, I did 2 stories for the Post, interviewed Tim Scott, no TV, but I do something. I did this, which is, as you know, the highlight of my week, which it really is. I love this show. This to me is like, it's nice having your own little platform and working with someone like you who is high integrity, and with a company like S3, which does, if you're an investor, does some yeoman's work.
Thank you.
This is,
and same here, my friend. I love our rapport and I love the energy we have. People comment on it all the time. They just say, you and Charlie, you got it. And it's just, we like each other, and it comes across that way. We don't step on each other. We let everybody have their time. We're not fighting for the microphone, and the energy is great energy, and it's just been fun seeing it develop over time.
And we let people speak, and we let people think, and it's a pleasure. Anyway, so I'll see you in the studio, maybe in Ilios next week, in Manhattan or San Pietro. This is Charlie Gasparino from Fox Business, from the New York Post, signing off with my partner in crime, the granddaddy of data, Bob Sloan from S3 Partners. See you next week.